Hi friends, welcome back to my channel. I hope all of you are doing very well. Today's video is on section 115 BAB, tax of certain domestic company engaged in the manufacturing business. Tax rate is at the rate of 15%. This section was introduced through the Taxation Laws Amendment Act 2019 and is applicable from the assessment year 2020-21. So this is very much relevant for your exam purpose, and stay connected with my channel for more updates. I already have made video on 115 BAA, which I shared the link in the description box. Section 115 BAB, tax on income of new manufacturing domestic company. So this section is applicable on the new manufacturing domestic company. The word new is important here. So new section 115 BAB has been inserted by the Taxation Laws Amendment Act 2019, providing for concessional rate of tax. Concessional rate of tax to boost Make in India campaign. This section was introduced, and here the tax rate is 15%, and on these companies MAT is also not applicable, and exemption from MAT in respect of domestic companies with effect from assessment year 2021. So this 115 BAB is applicable from the assessment year 2020-21. So what are the eligibility criteria, or what are the companies which are covered in this section? So this section shall apply only to those companies which have been set up and registered on or after 1st October 2019. So this section is applicable only when the company was set up and registered on or after 1st October 2019 and have commenced manufacturing or production of any article or thing on or before 31st day of March 23. So what is the main criteria? The business should be set up, the new manufacturing business. The new word is very much crucial. The new manufacturing business is set up on or after 1st October 2019 and it commenced its operation before 31st day of March 2023. There are some furthermore conditions. First is that the business is not formed by a splitting of or the reconstruction of a business already in existence. So what I have told you earlier, there it should be a new manufacturing business. So it should not be formed by the splitting of or reconstruction of an existing business. It should be a new business. There is some exception given in 80 IB. So the exception which was given in 80 IB shall also apply here. Second thing is that it is not set up the transfer to the specified business of a manufacturing of uh, 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 business of machinery or plant previously used for any purpose. So new plant machinery should be used. It should not be formed by the previous used plant and machinery. There were some exceptions given in 80 IB, and these exceptions are also applicable here also. Does not use any building previously used as a hotel and convention center, as the case may be, in respect of which reduction under section 80 ID has already been claimed and allowed. So this business should be a new business, should not use any building which was used earlier as a hotel or convention center on which 80 ID benefit was claimed by the SSE and same were given to the SSE. So this should be a new business. The company is not engaged in any business other than business of manufacturing or production of any article or thing. So the company should be engaged only in the business of manufacture or production of any article or thing, or and research in relation to or distribution of such article or thing manufactured or produced by it. So the company should be engaged only in the business of production of article or thing and the research in relation to the distribution of such article or thing. So these ABCD, these four are the prime criteria to be fulfilled to opt for section 115 BAB. So the what I have told you earlier in previous slide, there are four conditions. So the last condition is that the business should be engaged only in the production of any article or thing. That production of article or thing shall include generation of electricity but shall not include production of article or thing include generation of electricity, but shall not include the business of development of computer software. It should not include the business of development of computer software, mining, conversion of marble blocks or similar items into slabs, bottling of gas into cylinders, and printing of books or production of cinematographic films. So if any business is engaged in this four type of business, these started new business with these five type of business: computer software, mining, conversion of marble blocks, bottling of gas cylinder, and printing of books. All these five business will not be covered under section 115 BAB. So these five are not to be treated as manufacture or production of article or thing for the purpose of this section. What are the conditions to be fulfilled to get the exemption of section, to get the benefit of section, sorry, exemption I have told, to get the benefit of section 115 BAB? So there are some conditions which were mentioned in 115 BAA. So same condition is applicable here also. So I am not repeating it here. Just to give in summarized way, the income is computed without giving benefit of a special section 10 AA, that is for special economic zone, additional depreciation, scientific research, a specified business, agriculture extension project, skill development project, without giving the benefit of chapter 6A except 80 double JAA, 80 LA, that is for the IFSC unit located in IFSC, and 80M intercorporate dividends. So all these benefits same was discussed in 115 BAA. The link of the video is given in the description box. You please check that link also to have the better idea on this. Second thing, that there are some conditions that unabsorbed depreciation is not carried forward, additional depreciation is not carried forward, setup and carried forward loss is lapse, MAT carried is lapse. So all these things applicable here also. But since this is a new manufacturing business, so there is no question of business loss and unabsorbed depreciation. There is no question of unabsorbed depreciation and business loss. So all these conditions are fulfilled except carry forward a business loss and unabsorbed depreciation, as it is not applicable. Same thing, before filing ITR, the SSE should opt for this benefit, should opt for 115 BAB in a specified form, in a exercise of option in a specified form before furnishing ITR under section 139(1). What is the tax rate? What is the tax rate? Tax rate is 15%. Tax rate is 15% on income from business covered under section 115 BAB. So those business which is covered under section 115 BAB, the tax rate is 15%. In case of any other income, the tax rate is 22%. In case of any other income, the tax rate is 22%. Surcharge is how much? Surcharge is 10%. Irrespective of any income, surcharge is 10%, and that is further increased by a cess of rupees, cess by 4%. In any case, if the condition is not fulfilled, and if the option becomes invalid, if the company opted for 115 BAB and it was found that the company has not fulfilled the conditions, and it becomes and the option is invalid, then such company can opt for section 115 BAA. Such companies under 115 BAA. Like other conditions, that once in always in, once out always out, as mentioned in 115 BAA, same thing is also applicable here. So I request my viewers, so kindly see that video also to have you the better understanding. So thank you for today. Still, if you have any problem, if you have any doubt, I have covered the section elaborately. If you have any doubt, you can mail me also. My mail ID is amjaclasses.ca.cma@gmail.com. And thank you very much. You give your comment or in the comment section. Your comments are very much valuable to us. Thank you very much. Thank you for patience here.